Very good afternoon. Let's take a look at the markets. Asian markets were mixed today. This as investors digested a better than expected China second quarter GDP print of 5.2%. Hong Kong stocks fared better than others, lifted by a rebound in tech shares following the US approving Nvidia's AI chip sales to China, bucking the trend of current trade tensions. The Nikkei share average closed up 0.55%. The Hang Seng Index rose by 1.6%, while the Shanghai Composite Index ended the session down 0.42%. US stocks closed up slightly higher in Monday's session. That's despite ongoing concerns about President Donald Trump's various tariff threats to some of the US's major trading partners, including the EU, which has warned that it stands ready to retaliate unless ongoing trade talks result in better economic outcomes. Market players are keenly awaiting the latest consumer price inflation data to come out of the United States, which could suggest the direction of monetary policy. The Dow Jones Industrial Average rose by 0.2%. The S&P 500 ended the session 0.14% in the black, while the Nasdaq Composite Index gained 0.3%. Looking at local indicators, the all-share index is currently up 0.8% at 97,552 index points. On the currency front, we see that the rand is trading at 17.80 against the US dollar, 20.79 vis-a-vis the euro, and 23.95 against the British pound. Gold is trading Gold is trading at $3,363 an ounce, platinum at $1,385 an ounce, while Brent crude oil is trading at $68.95 a barrel. Let's get into a conversation now on the markets with Fahima Adia. She's a senior equity analyst at Momentum Investments. Thank you very much, Fahima, for joining us. So how is Donald Trump's proposed 30% import tariff levy on EU goods translating on European markets? Do you think that the two parties can come together and actually agree to something more amenable before the 1st of August?
Good afternoon, Nompo. Thanks for having me. Yes, so we actually saw the European markets opened in the green today, despite those tariff threats, largely shrugging it off. I think there is still time until it officially kicks in on the 1st of August. So I think investors are hopeful that further negotiations will bring this down before that deadline. You know, Trump is known for taking these aggressive approaches just as part of his negotiating tactics. But I think also in the interim, we have seen Europe trying to improve its trading relations with other countries that have been hit by US tariffs, such as, Canada and Japan, to also try and offset some of that impact.
So to what extent is it anticipated that the latest US inflation print might bear the impacts of the trade tensions that have been going on so far? And how might this tie into the Fed's position on rates, especially given that Jerome Powell is under pressure from Donald Trump to leave or vacate his seat?
So headline inflation is expected to increase to about 2.7%, and that's up from the 2.4% in May. And I think there's a good chance that we will start to see the impact of these tariffs start to show up in the June CPI data. So bear in mind, they had already implemented the 10% universal tariff from the 5th of April. So we could likely see that start to show in the numbers. And I do the reading will really influence how the Fed decides to move forward in terms of cutting interest rates or holding it steady. But if we know Jerome Powell, he's likely to take an independent approach to what Donald Trump wants. And if he believes it's not the right time to cut rates, and if inflation does seem to be increasing, it's likely he'll hold it steady.
I think we often underestimate China's economic performance. They came out with that 5.2% growth number for Q2, but is it sustainable?
Yeah, so it was good for Asia Pacific markets this morning. On the surface, it does look positive. It did increase by more than what consensus was expecting, and does seem to put China on track to achieve its full-year growth target of about 5%. But bear in mind, it was actually weaker than the 5.4% growth that we saw in the first quarter. The other big concern there, however, is the deflationary environment that we're seeing. So there's been a slowdown in retail sales from the earlier year, and that's also come below consensus expectations. conditions. If we look at the real estate sector, it's still struggling quite a bit. Investment was weaker there in the first half as well. So it does seem like more support will be needed to see recovery in that property sector and also in the retail sector. And, these tariffs, the headwinds from that also don't bode well for the Chinese economy in the next half. So quite a lot of headwinds.
Yeah, markets go up and they go down. Currently, we see them quite mixed, but on our local market, we see it driving hard, up 0.8% at the moment. What's driving that, and what are you seeing on the local currency?
So it's a good day today on our JSE. I think what's really driving that performance has been our resource sector, also industrials. So gold stocks are now benefiting from the stronger gold price that we're seeing. And that's, just being driven by investors turning to safe havens as Trump, just starts threatening new tariffs on Europe and so forth. And then if we look at Naspers and Prosus, that was also up quite nicely. And that's just been driven by, that update we saw from NVIDIA saying that they would be able to resume exports of the H20 chip to China. So in the past, the US government tried to block that, but it seems they are trying to lift that now. And it's just been positive for the Chinese tech sector in general, which has then benefited Tencent, which Naspers has exposure to. So I think that's why we're seeing some upside in our JSE today.
Awesome. Thank you so much for your insights, as always, Fahima. That was Fahima Adia. She's Senior Equity Analyst at Momentum Investments.